No one knows if this year's surging inflation is here to stay or if it's just transitory, but with investor jitter already taking a toll on traditional portfolios, you'd be wise to find new ways to profit from this new inflationary world, transitory or not. Hi, my name is Darius. If you are new to my channel, I focus on helping Canadians smartly invest their money, safely build wealth while paying fewer taxes. In today's video, we will look into a few different ways you can protect your portfolio from inflation, so let's jump right in. For starters, you might want to move some of your stock holdings from growth stocks to value. See, expensive-looking growth stocks like those of tech companies are hit disproportionately hard by rising inflation expectations. That's because if prices rise too far, too fast, the US Central Bank and Bank of Canada will be forced to slow things down by raising interest rates. And since growth stocks' business models typically trade profitability today for the promise of higher earnings tomorrow, higher interest rates reduce the present-day value of those future earnings. On the other hand, value stocks hold up well in a rising inflation environment, especially if inflation is rising due to strong economic growth like it is today. When overall economic growth rises, growth stocks become comparatively less attractive. Investors then start to shift their attention to cheaper value stocks, that is, company underappreciated by the market, which could deliver decent earnings if the economy keeps improving. So what does that actually mean? Where can an investor deploy their money? One option would be the Vanguard Value ETF, ticker VTV. It's a well-diversified ETF that will give you long-term exposure to value stocks. For more investment ideas, feel free to get in touch with me by using the booking link in the description of the video. If you are holding traditional bonds in your portfolio, you might want to consider switching them with inflation-linked bonds, since traditional bonds tend to perform poorly in a rising inflation environment. Inflation-linked bonds will provide more protection because their principal and interest payments rise and fall with the rate of inflation. One option would be the iShares TIPS Bond ETF, ticker TIP. The third way to protect your portfolio from inflation would be to invest in gold or commodities that are experiencing supply issues. This asset class has historically performed well during periods of rising inflation. And even better, their prices are also getting another boost from potentially huge infrastructure plans in the US and China. One easy way to capitalize on that would be to buy the Invesco DB Commodity Index Tracking Fund, ticker DBC. The fourth way to protect your portfolio from inflation would be to increase the real estate allocation. Real estate provides natural protection against inflation, both because prices of physical assets tend to increase with inflation, and also because property owners usually increase their rents to offset price rises. One option would be the CI Canadian REIT ETF, ticker RIT. That's it for today's video. I hope you found it valuable. If you haven't done that already, make sure to hit the like button, and if you want to see more, don't forget to subscribe. If you have any questions or comments, please let me know below. I read and reply to every single one. Thank you very much for watching, and I will see you next time.